So, work together 16.3 is the very last step of a fiscal period work for a merchandising business organized as a corporation. The very last thing that we do, so Chapter 16 is dealing with adjusting entries. We go to our worksheet, go to the adjustment column, start at the top, and record our debits and credits. The next thing we did was, yesterday we did our closing entries. In our closing entries, we go through, the first thing we did is we closed everything that had a credit balance on our income summary column except, not income summary column, on our income statement column except the account income summary. Then we did the ones that had a debit. Then we actually closed income summary, and income summary...
At this time, please allow Mrs. Van Ornum's third-hour Spanish students into their third-hour class.
When you close income summary equals your net income. So when you're trying to figure out that third closing entry, just remember that you're closing your net income into retained earnings. That is where the money goes for operating the business. The last step is to close dividends. Dividends is like drawings. It's what's taken out of the business to pay to their owners. And that is going to be closed as well. So you're going to have 4 closing entries. Now, what we did not do with our adjusting and closing entries, which you're going to have to do on your mastery problem, which is what you're going to have to do for that extra credit problem, is actually post. So it wasn't hard to go through and journalize it. And it wasn't hard to go through and record it, but you don't have that extra step of posting. And it's really important that you post in the correct order. So you have to journalize your adjusting entries, then post them. Then you're going to journalize your closing entries. Then you're going to post them. When you're done posting both of those, then you're going to prepare your post-closing trial balance. So after you've done your closing entries, prepare a trial balance, and the purpose of any trial balance is to make sure debits and credits equal. Now, the whole point of adjusting and closing entries is to get our books ready for the next fiscal period. The very first thing we learned in accounting was not debits and credits. We actually worked for several weeks before you actually heard the word debits and credits. We learned that assets equals liabilities plus owner's equity. So we need to get our books ready for the beginning of the next fiscal period so that our assets equals our liabilities plus owner's equity. We do that by getting our debits and credits to equal. So the only accounts that should have a balance on our post-closing trial balance, and when we look through our ledger, are assets, liabilities, and our stockholders' equity or owner's equity accounts. Revenue and expenses should all be closed out, and they should have a zero balance. If they have a balance, you've done something incorrectly in your adjusting and closing entries. So this one won't take very long, but when we pull it all together on your mastery and that extra credit problem, it'll take longer because you got to do that posting. So when we look at our instructions for 16.3, basically it says, for December 31st, here is the balances of our accounts after we've gone through and done our posting of our adjusting and closing entries. But notice, I like this. This is the evil little accounting laugh, ha 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 ha. They just give you the balances, they don't give you whether or not it's debit or credit. You are expected to know that because guess what? It's May. We've been dealing debits and credits all year. So we start in the very top with the name of our business. What's the name of our business? Visual Art Center. Thank you. Name of our document is called a post-closing trial balance. Post-closing trial balance is always prepared on a specific day, not for a fiscal period. Start at the top of your list and you fill it in and you go through. Excuse me. Once you've plugged in all your numbers, you're going to put the word totals on there because you're going through and adding up. And then you're going to add up your debit column, and then you're going to add up your credit column. And when the debits and credits equal, you do your little happy little accounting dance.